Hello everybody, here's Marco van der Kooi. Welcome to this session. We will wait another minute to get some people to get into this webinar, and then we will get started. Okay, hello everybody, welcome to this webinar, Time to Act, as Pillar 2 is approaching pretty fast. Actually, it's into effect already. And Scott, if you can move to the next slide, I will tell you who we are and later on what we are going to do. So my name is Marco van der Kooi. I'm from Inlumi and part of the team that's working on the go-to-market of this great solution we have created together with BDO. So Ian, if you can introduce yourself.
Yeah, thanks, Marco. Great to meet everyone and thank you very much for joining. My name is Ian Borden. I'm a tax partner at BDO and I'm our global head of our tax automation and innovation practice.
You, Scott?
Yeah, good afternoon, everyone. So I'm Scott Mills. I'm one of the associate directors here at BDO in the same team as Ian, and I have been on the development of this tool we're excited to show you today.
Thank you. If you can move to the next slide. We really have a short presentation about how this solution fits into the OneStream landscape, as this solution is built on top of OneStream. I will explain that in a bit. Then we will discuss why Inlumi and BDO team together in order to do this together and create this enterprise tax reporting solution. Then Ian will take over and explain a little bit about Pillar 2, and then we will move into the solution demo by Scott as soon as we can. So if you can move to the next one. So first of all, as this is particularly focusing on companies who already have a OneStream implementation, often used for consolidation and reporting towards the annual report. What we have done is creating the enterprise tax reporting solution that's natively fit into OneStream. And later on, we will show you how we've done that and how that looks like. If you can move to the next one, Scott. Just to provide you in a glance so you understand conceptually how that fits together. There's the finance cube for the consolidation and reporting. On top of that, we have created a so-called prepackaged solution, which include all the OECD regulation and what's required in order to do the calculations for tax pillar 2. We've combined that with the country-by-country reporting because that fits naturally very much together. And before that, there was also already a tax provision solution available, and that's these three parts are combined together in what we call the enterprise tax reporting solution. If you can go to the next. So we can leverage what's already been built into OneStream, because partially we are talking about the same data. So we can leverage that to get that data out of the finance cube into the tax solution. And later on during the demo, we will explain to you how that all fits together. But this is as a starting point to show you that this is really something in which you can leverage your current OneStream solution. If you can go to the next. So this solution has been built by Inlumi together with BDO. First, a little bit about Inlumi. We are a OneStream Diamond partner located in 12 countries with 14 offices. We already exist for quite a long time, not under the umbrella of Inlumi, but as in different names. But the company now has more than 250 experts in the digital transformation. We have quite some customers worldwide. The services we are providing is advisory, the technical implementation of solutions, but also the managed services. So we have quite some customers for which we do the functional application management and the technical application management. And next to that, we have built some solutions like this enterprise tax reporting solutions is one of them. But we are also currently in the process in creating a the so-called Illumi Insight, which is a connector from OneStream towards Power BI. So you can see all the great data you've collected in OneStream and use for consolidation, budgeting, and planning purposes, also in nice Power BI dashboards and reports. Then the next, and I hand it over to you, Ian.
Thanks, Marco. And again, very briefly, hopefully people are aware of BDO as an organization. We're one of the largest professional services firms in the world in 164 countries. And just flip onto the next one for me, Scott. I think the reason that we've got excited by this opportunity and this prospect is that we, our team as one of the largest independent implementers of tax automation solutions, we were big fans of OneStream and what OneStream was able to kind of do from a data perspective. And OneStream initially created a very basic tax starter kit, which was helpful, but not necessarily good enough to cover the size of clients that we deal with at BDO and the jurisdictions that they needed to kind of handle. So OneStream set us the challenge, and we rose to the challenge of trying to design something better and native and part and parcel of their product. So we work very closely with Illumi to help with the clever screwdriver parts, and BDO provided all of the tax expertise. So we started with a tax provision module, worked with a number of clients as we built that out and turned it into a product. We then were wondering where we would go next and how we were going to deliver for the Pillar 2 and the country-by-country reporting. So we sat in a room and we're able to kind of create that and have that validated by our BDO global network. So super excited by what we've been able to create so far, and with future products coming out of this factory in terms of being able to deliver for transfer pricing and some of the new ESG taxes that we're working on at the moment. I think this is a great opportunity just to give a tiny bit of context in terms of a lot of the new tax requirements that are coming out worldwide are data challenges and problems that we have with data. And we've been hugely impressed with something like OneStream about being able to gather that data in one place, having that central repository. And then we've been able to create the calculators that sit just off to the side that's able to kind of create those. So if we flip onto the next page, hopefully most people are aware or have heard of the new global minimum tax requirements. So I won't spend too much time on the technical. I think just one myth in terms of who it's applicable for. It's for all multinationals that are topping 750 million euros. They have to then gather a significant number of data points, between 200 and 400 data points in each jurisdiction, and be able to complete some complex calculations. So you can see where the data challenge comes from that side of things. I think Pillar 2 is a complex change, and organizations are looking at what systems and calculations they're going to have to do where they haven't done this before. There's certain rules about having been in it for a couple of years that you're being at that particular threshold, but we won't go into the technical details too much, but it is worth noting. The other point to note for any US customers that we've got on the call today, whilst the US hasn't formally agreed how they're going to treat the rule, any US organizations who still have European or global entities still need to participate, still need to do the calculation. So I know a lot of US groups we're talking to at the moment think they don't have to do anything. Unfortunately, you do. It is part and parcel of the calculation now, and it's all up and running and operational, as Marco said. And finally, just onto the last page, Scott, before we get going. Each of the 3 modules that are currently available can be used independently. They are a huge opportunity to improve the overall running of your tax function, but there are some synergies if those solutions are closely aligned. And I think that's the big change that we've seen in the market, where groups in the past would look at buying a best-in-class solution to solve one problem. What we're talking about here is a data challenge and having 3 or 4 or 5 different calculators to calculate the different types of tax, but sitting on top of one data source. And that's what we're going to show today, a Pillar 2 solution that requires a CBCR module as well, but the advantages of then using a tax provision module under the same umbrella. That's not to say if you already have tax provision, you have to adopt this platform or this product, But if you haven't, there is real synergies and opportunities. And without further ado, we want to just get into it, show you some of the things that are there, and hopefully get you excited about what we've been able to create.
And one thing is, if people have questions in the meantime during the demo, please feel free to add them in the chat function, and we will pick them up and provide the answers.
Brilliant, thank you both. So I'm very excited today to show you the enterprise tax reporting solution that is built natively within OneStream. Now, as Ian and Marco have said, this is completely natively within OneStream. So all of the functionality that it uses is OneStream's functionality. None of the data will leave your OneStream instance, so you do not need to worry about any additional security concerns, data security concerns, or anything like that. And your existing system administrators will be able to administer the system in the same way as your current solution is currently administered. Now, we have the three solutions currently within the enterprise tax reporting suite, and that is the tax provision, country by country, and Pillar 2. We're going to focus more of the time today on country by country and the Pillar 2 process, so that's where I'm going to start. Now, I'm going to start with the country by country, purely because we have the dependency for the country by country within our safe harbors for Pillar 2. So clicking through into the country by country is going to take us to our landing page for our country by country reporting process. Now, within here, we have our two buttons at the top to go into our input forms and our output reporting forms here as well. Here you can also see some nice dashboards, some outputs of some of your key data points. So in terms of your revenue, profit before tax, tax paid, and employees here as some examples. You can show any information points that you want to see here in any format that you want to see. It's a very, very powerful tool, OneStream, for being able to display this data in a way that's useful for you to consume. Now I'm going to click into the input schedules here, and this is going to take us to our main input page here for country by country. Now, within the solution here, we have a menu down the left-hand side. This is where we select which process we're looking at. So in this instance, we're looking at country by country. We then have our schedule types. Now for country by country, the only two relevant data types here, schedule types, are our data input schedule and our disclosure schedule. Our data input is where we'll input all of the data for our entities and jurisdictions, and our disclosures is where we will see our tables 1, 2, and 3 outputs. Now to enter data, we'll select the jurisdiction for which we want to look at. So from here, I can see all of the jurisdictions which are relevant to this demo environment here. So I will select United Arab Emirates, and that is going to load all of the entities for the United Arab Emirates with our total on the right-hand side. Now this process is the same for country by country and for Pillar 2. And the key point to note here is where you have users that are only responsible for certain entities within a jurisdiction, or other users who will only be responsible for signing off the jurisdiction and not responsible for entity input, then those users will only see the data that is relevant to them. So the entities or jurisdiction which is relevant to them, that is all completely configurable within the solution here. Now, the positive thing for country by country is if you are using OneStream for your financial consolidation, you will already have most, if not all, of the data points available for your country by country reporting within here. So for each entity here, we see we have two columns. We have an automated column, which is where we're able to pull data from elsewhere within the solution, and an override column, which is where we're able to override any information that we've automated or manually input information for which we cannot automate. So within here, we see in this first column, we're automating many of these data points because these will exist within your financial consolidation process. Now, where we see sometimes some clients not having a data point available is around the employee headcount. Now, this is increasingly being brought into OneStream now because it is relevant for areas of Pillar 2 as well, your UTPR calculation. So we collect all of this information for all of the entities across all of the jurisdictions. Now down the bottom of the schedule here, we have our entity classification as well, and this gives us a drop down of all of the 13 potential options we can select for our entity classification for country by country purposes, and we can select up to all of the 13 options per entity here. Once all of the information has been collected for all of these for all of the entities, we move into our disclosures, and this is where we will see our tables 1, 2, and 3. Table 1 is going to summarize all of the financial data here. So we see all of our jurisdictions on our rows, and we see all of the financial data points here on our columns. So this is all produced. All of the information is collected in local currency, and the system will translate this to the reporting currency as necessary. Table 2 will be produced as well. So this is going to summarize all of the information, all the entity classification that we've entered in our input schedule. And we will also see here anything such as tax identification numbers and addresses which we are collecting within the solution. Now we will be collecting these within the solution because we need those for Pillar 2 and our Globe Information Return as well. And finally, we have Table 3, which is where we're able to enter additional information for the jurisdiction or the entities. And because foreign translation is native to OneStream, the FX rates, our foreign exchange rates, are populated into Table 3 automatically by the solution. So you have our Tables 1, 2, and 3 outputs from the solution. Now, the key thing to note about our country-by-country solution is that it is configured to be interlinked to our Pillar 2 solution out of the box. So the information that is collected within this country-by-country solution in our Table 1 data here, this will feed through into our safe harbors in the Pillar 2 solution. I will show you that data coming through in just one moment when we're in the Pillar 2 solution. So I'm going to navigate back to the home page, and then we will look at our Pillar 2 process here. So clicking onto Pillar 2 is going to load our Pillar 2 landing page here. And again, we've produced some visual outputs for you here. So some dashboards to show you the safe harbors, a visual output of whether those have been passed or failed in each of the jurisdictions. We can see those in red or green there. We have our ETR for Pillar 2 purposes and top-up tax shown as well. And similarly to country by country, we can configure any data point to be displayed in whichever format you'd like on this landing page here. Now along the top, we have our end-to-end process. So we start with collecting information that's relevant for the constituent entities and jurisdictions for Pillar 2 purposes. We move through our safe harbor analysis, through to our full calculation. So we're collecting all the information for that. The system's then going to start calculating the top-up tax that's relevant for jurisdictions, allocating those down to entities, and then we're looking at allocating those to the parent entities under the income inclusion rule, and calculating whether there's any further top-up tax due under the UTPR mechanism. Now, once this has all been calculated, this will all be summarized in the Globe Information Return within the solution. Now, one point to note, this solution is fully backed by the BDO Global Network. So what that means is that the system will be configured for the Globe calculation for your filing jurisdiction and for the Globe Information Return for that filing jurisdiction too. Now, where the tax authorities in that jurisdiction change their approach, so whether that's some of the rules around the calculation or they require additional data points, or they change the format of the Globe Information Return, so the layout may change slightly, that will all be maintained centrally within the solution by the BDO Global Network. So that is something that you will not need to worry about maintaining yourself. That will be automatically reflected within the solution. Now I'm going to start in our first schedule, and this is where we are collecting some of the information that's relevant to our Globe Information Return. So by clicking into this first schedule, we see here on the first tab, we have all of the rates that are relevant that are coming from our Globe model rules and are relevant to the group as a whole. So this is where we have our minimum tax rate, our thresholds for some of the safe harbor tests, and our start and end date for their fiscal year. Now, where any of these rates are specified within legislation, again, this is going to be centrally maintained by BDO within the solution, so you do not need to worry about maintaining these yourself. Clicking onto the second tab, this is going to show us all of the constituent entities for the jurisdiction for which we have selected. So here I've selected Argentina as a jurisdiction, and it has loaded our 2 base entities here within Argentina. Now within here is where we are now collecting all of the information that is relevant to the Globe Information Return. So we have our tax rates. Within here, we are calculating, or we are specifying here whether there is any domestic top-up tax payable for each of these entities on the basis that's a qualifying domestic top-up tax. And just on that note, this solution can be used for the calculation of qualifying domestic top-up taxes as well. So we can also configure the system to calculate those and maintain those rules going forward as well. Here is again where we are collecting further information, so our tax identification number, all of the categories that are relevant then for the global information return, so the type of parent entity that we have, and then various other data points that are relevant to the calculation. We also have our elections within here. So we have two types of election for Pillar 2, an annual election, which is just made in year, so we specify yes or no, and a 5-year election where we enter the year in which we are making that election. Now the system will roll forward that election for the 5-year period, unless in a subsequent year that election is revoked, in which case the system will stop that election from being rolled forward. On our third tab is where we're collecting all the information relevant for a jurisdiction. So we have our annual and 5-year elections, which work in a similar way to on the entity level. We have our GLOBLOS election within here as well. We also have the legislative commencement dates. So where the IIR and the UTPR are coming into force for a jurisdiction, those will all be maintained by BDO within the solution as well. And what that will do is tell the system whether it needs to calculate any taxes under each of those allocation mechanisms there. And finally, we will track the ownership matrix. So this is where we are tracking where each of the entities within the structure is owned by other entities within the structure. Where you already have something like an investment register used within your OneStream platform, we can leverage that data within here. Otherwise, it will just be maintained within here manually. So once we've collected all that information for all of our entities and jurisdictions, we will start looking at the safe harbor calculations. Now, as I mentioned earlier, the safe harbor calculations will leverage the data from our country by country solution automatically. So we will see in this automated column data coming through that is coming from our country by country solution within here, as well as any other data points that we have elsewhere within our OneStream instance or elsewhere. So we'll see this coming through in this column, first column here. The user is then able to override those amounts as well, or manually input where we don't have a basis for that. So we'll see within our safe harbor, we have our 3 tests, our de minimis test, our effective tax rate test, and our routine profits test. And the system is going to indicate here whether each of these tests are pass or failed within the solution here. Now, one point to note is that you will notice that the de minimis test does not show a result, and that is because we are looking at things in local currency. Our threshold here is specified in euros, whereas the information that's been entered is in our local currency. If we move into our reporting currency, this is where we will then see the result of that test. So we can see that that threshold has been breached and therefore the test is failed. This is a key point to note. As the system takes FX as a systemized problem, FX is not something that is a problem for the end user. So they will enter things as they recognize them in their local currency. So once we've collected all of this information for all of the entities across all of the different jurisdictions, we come to the Safe Harbor results schedule here. This is going to show us here whether any of the Safe Harbor tests have been passed or failed for each of the jurisdictions. And one point to note is that the once out, always out rule is configured within the solution so that if a jurisdiction fails one of the safe harbor tests in 1 year, it will fail those safe harbor tests in every subsequent year as well. We can see here for each of the tests whether those are pass or failed. So we have our CBCR safe harbors here. We also have the UTPR test, which is only running on our UPE jurisdiction. And we also have the QDMTT test. Those are currently all failing at the moment because the OECD has not specified the jurisdictions for which will pass that test. Once the OECD has specified that, again, that will be maintained by BDO within the solution. So you will automatically see each of those jurisdictions being passed or failed within the solution. So once we've collected all of this information, we're looking at Argentina, it's failed the safe harbors, so we now need to move forward into the full calculation. So we go to our globe income or loss schedule within here, and we'll note we have all of the data points here as relevant to the globe income or loss calculation. Now, you'll notice each of the light rows here has a reference at the end, and this is a cross-reference to the globe model rules. Now, one of the key things that we have within the solution is we can right-click on any cell here and navigate to the OECD article commentary, which is going to open the globe model rules here. What this means is the end user is able to navigate, look at a data point to understand what that data point is, and cross-references to the globe model rules to understand what they are being asked to input within here. They do not need to leave the solution. All of the information is contained within the solution, and they can either access this information by right-clicking, as I just demonstrated, or by clicking this book icon at the top, which will open the globe model rules in a PDF format. Now, where guidance has broken out data points in further detail, so for instance, our net tax expenses here, the guidance specifies some more granularity to that. We have included that within the solution to give you further basis for collecting that information. Now, we appreciate that you are not going to hold all of the data points in the ways that the globe model rules specify you to declare that amount. So at the moment we have categories aligning to the globe model rules, but where your data model will hold certain of these data points in more detail, in more granular detail, we will map those in to each of those here. And we have a number of accelerator schedules which we provide to you to help you in identifying where data relevant to these data points is currently held within your data model within OneStream or in third-party systems. So we can help you in understanding where the data is currently held within your existing system infrastructure. So as we move down the schedule, we see we have all of the data points here. And once we've collected all of these data points for all of the entities within a jurisdiction, we'll see here the system calculates the globe income or loss for the jurisdiction and whether the jurisdiction therefore has a net globe income or loss. Now, if you are a shipping company, we do have a separate schedule to calculate that shipping income. So we see here there is further data points, and where you are a shipping company, there is a lot of automation in terms of calculating some of the restrictions in terms of that shipping income here. So there is another schedule here, and I'm not going to spend too much time on it, but the system is configured to cover the basis if you are a shipping company. Moving forward into the adjusted covered taxes, again, we have all of the data points which are relevant to the calculation within the solution here. So we will collect all of these data points, and again, we'll work with you to identify where these exist in your current finance infrastructure. So as we move down the schedule, we see all of the data points. The solution will automatically recast your deferred tax. So if your deferred tax is being recognized at an amount higher than 15%, the system will automatically recast that to 15%, which is what you can see happening here within the solution. On this middle row here, it's recasting this down to the 15%. So once all of this data is collected, we're calculating our adjusted covered taxes by each entity and the total for the jurisdiction. Now, one point to note in terms of ensuring data integrity, where there are certain data points which require an election, for instance, so we look here at the deemed distribution tax, we have data against this cell here. We have already inserted validations within the solution to ensure that data cannot be submitted against that row unless the election has been made. So if the user is to sign off on this process and they have not made the election but entered data against this point, they will be forced to go back and either make the election or remove the data before they are able to sign off on the process. So we have ensured certain data points such as that. We have data integrity built in out of the box. So moving forward, once we've collected all the information for our globe income or loss and our adjusted covered taxes, this is where the calculation engine now starts kicking in within the solution. So this is collecting all of the information that we've entered elsewhere. It's going to calculate the effective tax rate as per the Globe Model rules, and therefore the top-up tax percentage. We've already collected all of the information that's relevant for the substance-based income inclusion within our safe harbor test for the routine profits test. So we're bringing the data through there to reach our excess profits. And we are therefore getting to our top-up tax total figure. Now, where there are any additional top-up taxes paid under any of the other articles, where that criteria is met, the system will automatically calculate that amount within here. And one key thing to note here as well is around prior year recalculations. So in the out-of-the-box solution, you will have 3 scenarios configured for you. You'll have your actual scenario, which is where you are going to enter data that is going to be used effectively for your initial submission of the Globe return. You will have a refiling scenario. So this is where we will have data if we need to refile any of the years to take account of any movements in the numbers or the recapture mechanism, for instance, if that is in effect. So what we will have is a separate scenario for that. We will be able to copy data from our actual scenario onto the refiling scenario to prevent you having to enter all of those data points again. So you will copy all of the data across, and all you will need to do is change the data points which are relevant for that refiling. Now, within that refiling scenario, you will tell the system which year that top-up tax is actually to be paid in, and you will see that amount coming through on this row in the relevant year here. So that will automatically flow through within the system. Where there is any qualifying domestic top-up tax, where we have entered that already within the information gathering schedule at the start, or we're using the system to calculate that amount with it natively within the solution, that will be offset against our Globe calculation here to get us to our total top-up tax for the jurisdiction. So this schedule is fully automated. The user does not need to enter anything within here. Once we've calculated the top-up tax for the jurisdiction, the system is going to automatically allocate that to each of the entities within the jurisdiction, and that is a fully automated process in line with the allocation key in the Globe model rules based on the Globe income within the year. So you see this amount here being allocated down to each of the base entities. Again, this is fully automated. The user does not need to worry about having to enter any information within this schedule. Once we then know which each of the entities has top-up tax to be allocated under the IR mechanism, we then look into this schedule, and this is an assisted schedule for the end user. So this schedule will automatically filter out on the columns here only the parent entities as they have been flagged in the initial schedule within the solution. This is ensuring that no top-up tax can be allocated to any entities which are not a parent entity and would therefore be an invalid entity to receive any top-up tax under the IIR mechanism. So this is fully assisted for the end user, so they only see those entities which can receive the tax. The user will then enter the amount of the tax to be allocated to each of those parent entities. And where you do have any partially owned parent entities and the offset mechanism comes into play, then this is where this is configured to take account of that automatically within the solution here. Now, once we've allocated all of our tax under the IIR mechanism, the system then looks to see whether we have allocated all of the tax that the group should be responsible for under the IIR mechanism. So it is calculating here the total top-up tax has been allocated to the entity and the ultimate parent entity share of that, and comparing that against the amount that has been allocated under the income inclusion rule. You can see here the system has indicated that yes, the full amount has been allocated under the IIR, so no further amount needs to be allocated under the UTPR mechanism. Now, to the extent that it was, this will occur in the next schedule here. So this is our allocation schedule within here. So this is a fully automated schedule. The system will here flag whether the UTPR mechanism is in force for each of the jurisdictions. If it's not going to allocate any tax to there. It's going to do the allocation for the number of employees and the tangible assets and allocate that to the jurisdictions in line with the allocation key per the Globe model rules. Now, the only information that the user needs to enter on this schedule is where there's been UTPR amount allocated to a jurisdiction in a prior year that hasn't been collected yet, which is an anti-avoidance mechanism within the Globe model rules. If this is the case, the user will indicate a yes within this cell, and the system will remove that from the allocation in the current year. Now, one point to note, just on the calculation of top-up taxes generally, and I'm just going to go back here to our top-up tax schedule here, where there is a jurisdiction which passes the safe harbor. So we look at the United Arab Emirates. If there is any information that's entered within our Globe Income or Loss schedule or our Adjusted Covered Taxes schedule, whilst the system will still run through the calculation and look at the amounts that could be payable by that jurisdiction, you'll notice at the bottom here, it calculates a 0 amount for the top-up tax. Now, what that means is that you will never have top-up tax calculated for any jurisdiction which has passed the safe harbor. But what it does mean as well is that if you do want to run any kind of what if scenarios, you're able to do that quite easily. So you can collect all the information as if you were running a full calculation for that entity. The system's not going to calculate that full amount in terms of being, allocating that amount further down the line, but you could see the theoretical exposure you would have if the safe harbor was not in place. So it's a very useful tool there in terms of ensuring data integrity while still enabling you to kind of forecast the impact if the safe harbors weren't in place there. Now, one final point to note, one final schedule is the Globe Loss schedule. So where you have made the Globe Loss selection, you're able to track this within this schedule. Now, you're able to track this by each jurisdiction, and the opening amount is going to automatically populate from your prior year closing amount, and you can therefore track the amounts as well, any amounts which are created or used within the year or eliminated within the year as well. That's all within here. Additionally, there is also a recapture schedule. So that is going to track any of the deferred taxes, which you may need to recapture over a 5-year period. We will configure that to the deferred tax categories that you have relevant to your business, and that we will track that year on year, the movements on that, to show whether those have been fully reversed or not. Where they have not been fully reversed and aren't an exception within the Globe model rules, then the system will automatically flag to you that you need to do a refiling for that period, as you have an exposure to the recapture mechanism. So that's all fully native to the solution as well. Now, the key thing in terms of our Pillar 2 solution, similar to how the country by country solution is linked to Pillar 2, our Pillar 2 solution will feed back into our tax provision solution. So where we have calculated our taxes, our top-up taxes due under either the Globe mechanism or where we are configuring the system to be used for domestic top-up taxes as well, those are automatically going to flow back through into our current provision for tax provision purposes. So we have our one source of truth across our tax reporting process. Similarly, where we have a Globe Loss deferred tax asset being created here, that is also going to flow back through into our deferred tax schedules. So on that note, I'm going to go into our tax provision solution now. So again, this loads our tax provision sub-landing page. We can see some dashboards again for some of our data points. Again, fully customizable for which data points you want to see in which format. We have across the top here our current year inputs, our return to provision, our prior year adjustment, and our reports. So I'm going to start in our current year inputs here. So this will load our forms for the year. Now, the entity I'm looking at is a US entity, and you'll notice here I'm able to select 2 jurisdictions for the entity. These 2 jurisdictions are our federal or our national calculation and our state or our local calculation here. So this is all built within the solution. You are able to calculate your local or state taxes within the solution as well, and configure these to be offset against your federal or national calculations as well automatically by the system. I'm going to look at the national calculation at the moment. So this is going to load our current provision form for our national process here. So We start with our pre-tax income and our reporting gap, and we'll see this amount is automated through from the financial consolidation solution here. So we have that amount coming through. Now the layout of this schedule is slightly different. We have 3 columns. We have our automated, we have a manual adjust, which you're able to amend that amount or enter amounts which are different, and then we have our provision, which is our total of our automated plus the manual adjust. Now we can enter comments against any of these categories here as well, so the end users can enter explanations to what each of these adjustments relates to. We're then reconciling back to our profit under local gap, so we have our permanent and temporary differences, our reporting gap to stat differences here. Now if you are holding your local gap profit discreetly, we're able to leverage that for you. We then have our permanent differences, and this will all be configured to the permanent differences as relevant to your organization, followed by our temporary differences here. Now, just on the note of temporary differences, if you are taking a balance sheet approach, this system supports that as well. So the balance sheet approach will take your opening and closing book balances per your financial consolidation, and you will also track your opening and closing tax basis. The system's going to calculate the temporary differences on those and post them in the first instance to current provision, unless you specify the movement is elsewhere. Now, once we've collected all of this information, our permanent temporary differences, we get to our total taxable income. We have our losses here as well. So our losses are all maintained and tracked in much more detail. So that comes through from the loss schedule. Now I'm a super user, so I can see every single account within the solution here. But you'll see, notice this row here is red. And this row here is red because I'm in a US entity, and this account relates only to Italian entities. So I'm blocked from inputting any information on this schedule. Now, in actual fact, the end user wouldn't even see this category. But this is just to show you, even if they were able to access this or view this in some way, they would not be able to enter data against this. So you are able to lock certain data points down to certain jurisdictions or entities within the solution. We then have our after-tax adjustments. So we have all of our tax credits, our prior year adjustments coming through. And you'll see here as well, if there are any Pillar 2 top-up taxes, these will flow through automatically within here. The system will automatically, based on the movements you've entered above, calculate how much of this impacts your profit and loss and how much impacts your other comprehensive income as well. Now, if you are required to report your exceptional analysis, so your exceptional versus underlying analysis, there's a schedule for this as well. So we'll see here, you're able to analyze the difference between your total tax provision and how much of that is exceptional. The system will then calculate the difference relates to underlying movements, and this can be produced into a report for you to report on these amounts. Your temporary differences, you're able to track line by line on an opening to closing basis as we move across. So we start with our opening amount. We have any prior year adjustments coming through. Now we can't change any amounts in here because that comes from our prior year adjustment schedule, and the amounts relating to the current provision come from our current provision schedule as well. We have deferred only movements, balance sheet only movements, as well as other comprehensive income movements and equity movements here to get to our closing balance on the right-hand side. Now, there are a number of additional schedules to track some of these temporary differences in more detail. So for instance, our losses schedule, we're able to track by type of loss here and by year. So we see here we have 10 million of losses brought forward relating to 2 years ago, 2021, and we can see this being used here in full. So we have no amount carried forward, and we saw that 10 million coming through in our current provision schedule. So this gives us much better overview of our losses within the solution. We also have some more detail around our depreciation and intangibles. This is, if you want, you can track these on a book and a tax basis. This is going to automate all of the movements from your financial consolidation within here. We're separately monitoring our tax basis over here. The system is then going to calculate how much of these movements relates to permanent and temporary differences. So we're taking that problem away from the end user and systemizing that within here. The system's then going to apply the deferred tax rates in the next schedule. So this is where we are seeing the impact of this coming through. So this is just our temporary differences at the deferred tax rate. Where there are any rate changes, so where we see any rate changes, difference between the opening deferred tax to our current year provision rate and our current year provision rate to our closing deferred tax rate, the system's going to automatically calculate that for you. We then are tracking deferred tax not recognised. So we see here within this schedule, the closing balance before we've made any recognition decision. We are then seeing our deferred tax not recognised on an opening to closing basis. We see any amount that's come through in our opening amount. We can enter any movements in the year in this middle column here to get to our closing amount along here, and therefore we see our recognised position being carried forward in this final column. So we have full visibility here over our how much we could potentially recognise to how much we have actually recognised in our financial accounts here. We also have much better visibility within the solution of our current tax balances. So we're able to see here in terms of our categories of current taxes, so we can see our income tax payable and receivable internally and externally. So whether that's an intercompany amount or payable to the tax authorities, we can see our uncertain tax positions, Pillar 2 top-up taxes. We can track all of these discretely, separately by year. So we'll notice here within each of these categories, we have each year as well, what the user is asked to do, all of the movements that have been entered elsewhere within the solution. So any prior year adjustments, current year amounts come through. We see refunds and payments coming through from our financial consolidation platform as well. And the user just has to allocate these against which of the liabilities this relates to. So we'll see here from last year, I have an opening amount. We've got a small prior year adjustment on that. And we see that the payment relates to that year, which then discharges that liability in full. So this gives us real good visibility over our current tax balances. Once all this information has been collected, this then all gets pulled into our total tax reconciliation. This is where we see all of our profit and loss movements and our balance sheet movements within one schedule. So the user cannot enter any information here. All they can do is reallocate between different categories here. So for instance, from a deferred tax asset to a deferred tax liability. So we see all of the amounts coming through. You will also see the impact of double entry within here as well. So each row will net off to 0. We can see that the double entries have been made across each row here to give you validation that all of the correct journals are being accounted for within the solution. Now, on the subject of journals, at the bottom of this schedule, we have 3 rows. This first row is the amount that we've calculated the closing balance should be within this solution here. This middle row is the amount that's currently shown within our general ledger. So we'll see here we are saying that there should be income tax payable of 44 million, but we have income tax receivable of 10 million sat within our general ledger balance. Therefore, the system is calculating that there needs to be a 54 million journal posted. So this is done on each of our different categories. Now, this is automated into a journal report for you. So for every single entity across your whole hierarchy, this is pulled into a journal report. And you have the possibility there to either post that automatically at the click of a button, or alternatively pass that journal report to your finance colleagues to post those journals. Now, once those journals are posted, you don't need to wait for confirmation from your finance colleagues. You are able to click this import console data button. Now, every time I click that button, that is going to refresh any of the data points that we've connected from our financial consolidation or elsewhere within OneStream and refresh that data. So this is giving us complete control over when we are refreshing data from finance, and also it is click of the button functionality. So every time I click that button, that is going to pull through the live data. I don't need to extract it from elsewhere and load it in. I just need to click that button. So I have far better control over that process there. Now, once I've collected all of that information, we can then look at some of the output reports. So we have our schedule reporting. So what we're able to do within this is view each of these different forms, but view this from a a parent level. So whether this is a jurisdiction level or whether this is a divisional level within your organization, you're able to configure that within here. So this will load each of the different input forms we've looked at, and you're able to see side by side each of the entities here and how that makes up the total. So this gives you full visibility over how your total for the group is made up across each of the different entities and each of the different jurisdictions as well. Within the disclosures, this is where we have all of our reporting outputs. So this is whether this is for your financial reporting or whether it's for you need to produce additional reports for your auditors or for management. These can all be configured within here. Now we have configured some IFRS reports out of the box. So what we'll see here, for instance, is our current tax balances, opening to closing, and the movement types within here. These are all completely configurable. So all of the input forms and output forms can be completely configured for how the categories and the movements which are relevant to your organization. We've configured some of the typical ones that we see within this demo environment, but just a point to note, if you do need additional management reporting or anything like that, that is all very easily configured within the solution here. And this will reside within this schedule here. Now, one final point to note, which is a native to OneStream, any data point that we have within the solution, we have full audit history over. So if I right click on any of these data points and drill down on this, what I'm able to do is on this data point, right click and view the audit history for the cell. Now this is going to show me the full audit history of this given cell, so I can see who did it. This was me, and the time that it was done at. If this was to change to 2 million, it would retain the history of this 1 million, and I would see the 2 million coming through and the time and who did that by in the solution as well. So you have full audit trail within the solution. Now, once the users finished all of their work, they've posted, the journal entries all agree, we've got nil journals, they're able then to sign off on the process. So we complete the workflow. This is going to kick off the sign-off process. What we will do is process the rules. This is just going to make sure that all of the rules have run. There's no data that hasn't been refreshed within the solution here. That's just going to do that. Once that's done, we can then move forward into confirm. This is where we have validations within the solution. So this is where we can put hard or soft validations. And what I mean by that is a hard validation means that if a validation is failed, the user will not be able to sign off on their process unless they go back and correct that. A soft validation is where the system will just flag that something does not look right and flag to the user they may want to go back and double check that this is correct. So these can be completely configured. We've got some basic ones out of the box, some fail-safe ones, but we can configure these within the sign-off process to make sure that your process runs smoothly and you're not having any incorrect data coming for review. Once those are all passed, we then go to certify. This is where we can put questionnaires in. So we can ask the users to answer questions, and they will need to answer those questions before they're able to sign off on the process. Once this is done and all the questions have been answered, the user is then able to certify the process. This will then pass this to the next review level within the chain. So we will configure the system to your review process, and this will then move its way through that review process, again with full audit history in terms of that process being escalated and de-escalated again. So it's very powerful in being able to track that sign-off process. So that was a quick overview of the solution there. I'm going to pause there and just see if we have any questions at all.
Thank you, Scott. So if you have any questions, please fill them in the chat, and I will pass them through to Scott. In the meantime, I have a question that has been asked several times. So what's the strategy concerning all the different jurisdictions where this needs to be disclosed? What's the strategy around that?
So if the solution, every company is going to have a filing jurisdiction for which they're going to need to file their globe calculation for Pillar 2, and the system will be configured as standard for that. Where there is additional configuration needed for your qualifying domestic minimum taxes, and that can be done within the solution as well.
Okay. And another question is, why should companies start now? Because we call this time to act, and why it's important to start right now, as they only need to disclose it next year, and moreover, there could be safe harbor. So there's no reason yet to do so. That can be the thought.
I guess it's probably the wrong thought. I think the December year-end businesses will have already had to have made a disclosure statement to their auditors that they've done some level of analysis. You're having to model the impact that this tax has. You're having to decide whether the safe harbors, you're going to take them or you're going to reject them. Some organizations may not want to do it because of the once out, always out rules, and you may be getting rid of that entity or that country or anything else. There's a huge amount to think about, and there's a huge amount to model. This is a brand new tax. This is a brand new area. There's a significant number of data points that we've never had to gather before. Whilst for something like country by country reporting, it's something we think we can pretty much automate on the Pillar 2 side of things. There's data points that aren't going to be available in any system. So there's a conversation around whether those data points need to be calculated elsewhere and brought in, or whether they need to be manually captured and brought in as part and parcel. And there's also a finite number of resources and solutions available. Every organization over that 750 number has to do something. So it's a huge undertaking. It's really significant. Resources are going to be stretched, and it's going to have to form part and parcel of what you normally do in this area. So unfortunately, you can't wait.
Okay, great. Then there are no further questions. So Scott and Ian, I would like to thank you for participating in this webinar, and especially also all the people who joined this webinar. Thank you for joining us, and bye-bye.